Here on Friday morning, we got earnings from one of the biggest players in the world, General Electric. They reported earnings at 28 cents, beating the street by 3. They also reported revenues of $29.5 billion, beating by that $500 million. That's not too bad when you consider that exiting CEO Jeff Immelt says that the legacy of GE, the oil and gas, is not picking up the way they thought it was going to be. And in fact, further forecasting shows that they're expecting it to be a lot slower climb back due to the volatility in the market than they were actually expecting. Now, GE has far too many divisions for me to delve deep into what GE is doing, but I can tell you that a lot of GE's numbers, including their margins, are down to the way we don't want to see them, not the way we do want to see them. Now, GE is very, very sure that incoming CEO John Flaherty is going to do an excellent job. Now, I'm not entirely sure, but GE probably hired this guy because they've got some faith in him. John Flaherty needs to get out there and he needs to really prove that even though GE is a revenue generator, the GE can be a profit generator again. They're in way too many sectors for this company to be simple. It's not streamlined. It's not easy to run. There's far too many departments. GE may beat on earnings. They may beat on revenues. They may make a lot of money. But I don't know if GE actually is a burgeoning company that's going to do a lot of growing. I think they've spidered themselves off into far too many sectors and find themselves kind of scrambling as some of their bigger segments seem to be having trouble coming back, bouncing back from what they deem as a struggle period. I don't think that's going to be the best way to start off a new CEO, is bringing him in on what seems like kind of a regressive foot. Let's see if John Flaherty can do a better job than Jeff Immelt has done. But GE seems to be too much of a complex business for me to want to delve into.